Okay, guys, welcome to our session, My Stock Life private session for the premium members only. So if you guys have any questions, anything you guys want to, share with me or any questions that you guys have regarding the topics that I'll cover, please do type them in, right? And then I can, best to my knowledge, answer them. But basically some topics that I will cover today, just some things that I was going through. I'll just write them down here. I wrote them down, but I type it here. We'll compare some historical charts and what's possible for coming months. It's always good to know, like, it gives us a little better idea that what we can expect, right? We'll compare the 2008 to 2022 and 2000 as well. All right. And remember, no historical past performance means the same thing will happen today, but it just gives us an idea of what's possible, right? CPI on Wednesday we have, we'll go over this, what it means. Then UB bonds, dollar and TNX, we did go over a pre-market the other day. LB also goes over post-market many times. And then one thing I do want to write, Paul Walker, this is something that you guys should all study, right? How he handles stagflation, about a few decades back, right? This can give you guys a very good idea of what exactly may be going on now and what things might be happening, right? I'm not going to go in details with Paul Walker. That's just something for you guys to do your research, so you can write the name down, and then we'll go on from there. And then obviously we'll look at the BTC USDT, and then obviously some scalping, managing and strategies that I personally use. I don't make them too complicated. I try to keep them as simple as I can. Simplicity, I think, wins at the end of the day in the stock market. The more complicated you make your charts, then your brain is all over, because half the indicators will be bullish, half will be bearish, right? And so these are some of the things that we'll cover today. All right, so I'll just remove these drawing first. Obviously, comparison of charts. So this is the monthly SPX I have right here, and I'm just going to open up a SPY. Okay, so I already have the SPY monthly chart with this SPX monthly. Now ignore the numbers, right? But the chart is the same because they're both the same. SPY is a proxy, right? And then we have SPX. Okay, and let me just remove these drawings. Now, what we want to do here, right? Back in 2000, right? We can see right here. Back in 2000, basically the market was going up. It was away from the 200 MA, right? It was away from the 200 market, 200-day moving day average. A lot of stocks which are experiencing what was happening now. A lot of tech stocks in the market, as we have seen, Zoom, TDoc, Jumia, many others in the tech world. All right, even Netflix now has given up a lot of gains. All right, and then some other stocks who have given up a lot of gains, UPST. The list is never ending, right? The market went down almost all the way from 2000 until 2002, 2003, right? I don't know how, if inflation was an issue back then. I actually need to look into that. Right, but right now we are more concerned with inflation, I believe, and then obviously money coming out of tax. The market was sideways almost for 2 decades, and then for the recovery, it took almost 7 years. Right. Basically, my whole point here is, what if something like happens now? Right. Some of you guys might think is relevant talking about this. Some of you guys may disagree with me that I'm wasting time, but since I'm doing this session, so I will cover this. Right. Is the same possibility here? Is the same thing possible here for, I'm not saying for this long, maybe even for 2-3 years. Let's say even if it's possible for the next 2 to 3 years, right? Which is very, very possible by looking at the chart. It's an absolute possibility. How do you want to manage your trades, right? What are some of the things that you might want to look at? So these are some things to consider, right? Many people are trying to buy the dip thinking that the market is going to go all-time highs, or maybe it's going to resume the uptrend. So make sure you guys keep in mind, what if the market just goes sideways, right? What if it's just choppy sideways, nothing really happens in the market, right? So keep this scenario in mind so you guys can manage your positions better and you guys know what to trade. And I highly, highly recommend that you guys pay attention to some fundamentals and make sure you study if you're picking up some good companies. There will be some companies on sale, companies like Amazon, Apple. If people that picked up in these months, today they're laughing. Those companies are up huge, all the world-class companies basically, all right? And so that's one. Now let's go over 2000. So that's year 2000. In 2000, we had the financial crisis. This is a dot-com bubble. This is a financial crisis. The market right here is what I want to compare to more of 2008. So on the monthly, we were away from the 200 MA. The red is the 200-day moving average, right? Here it was 1200, and then the highs we got was almost 1600, right? So it came down quite a bit. All right, from 16 points, it came down 4 points basically. If you guys do the calculation, whatever percentage that comes out to. But here, the monthly 200 average is pretty far, right? On the SPX, this is not usually normal. This is not normal. There's always an excuse. Something always happens that when the 200 MA is touched on the SPX. So I really think that's one of my main concerns. And then also when I look at the MACD, this is after many, many years that MACD has such a high volume, and finally it crossed over and we got some red bars. And this can last for many, many months, right? So just be prepared for that, have that mindset, all right? So in here, the 200 MA stays very close. Sorry, 50 MA, I'm sorry. The red is 50 MA. My apologies for the mistake. So I'm talking about the 50 MA here. The 200 is the blue, all right? 50 MA, all right? So we are always near the 50 MA. We don't really go too far away from it. When we do, there's a pullback. So the same thing here is possible. So we can have this pullback towards the 50 MA. By then, by the time we have it, if it happens, which I think like this is my one of the main reasons, I think the market goes sideways or we go see it. Let's say in the next few months or maybe in 1 year, the 50 MA also goes up. Why? Because these prices will be factored in. The average will increase, obviously, right? Because, you know, and whatever happens here, God knows, and we will touch this 50 MA eventually, I think, in the coming months. All right. That's the reason I'm not in a rush to play swings. Many of you guys asking for leaps. There's been 3-4 months. I have not played leaps because we got a clear signal back in December, Jan. There's time to chill on swings. The market can't just keep running up. Eventually, it needs to consolidate. All right. Many people are still trying to buy the dip. They're trying to play. I understand it's a good thing, right? Obviously, the market is not going to come down. There will be days when there will be big green days, but just watch the flow, I guess, to see how that works. And I'm not saying play downside either. It completely depends. But on the monthly, I think we are due for some consolidation here for a long term. And guys, you're more than welcome to share your opinions in the chat. If you guys see something, please. I would love if you guys can also interact with me. That would be great. If anyone has any opinions you guys want to share, go ahead. The mic is open for you, since this is only for the premium members. All right. So to just keep this in mind for the coming months, guys, right? This actually goes towards 2023, even 2024. For the next many, many months, the market can consolidate. Okay. And I don't know how many of you guys pay attention to real estate, but house prices in Canada, I did send the chart in premium chat. The difference between people's income and the real estate prices here is insane. I don't think it's going to remain like that for too long, right? I talked to some realtors. They try to argue with me. I mean, realtors are always bullish on their market, no matter what happens. Rarely are they ever bearish, right? Some things just don't make sense right now. Inflation is through the roof. You guys can see it yourself. Gas is super expensive. So I think the market will correct itself. Things will be put into place. All right. So that's that. Anything regarding the comparisons, please leave a comment. So I'll close this for now. So that's one, right? So now we have CPI coming on Wednesday. All right, we have CPI on Wednesday. And before I close the monthly, let's just go over the weekly on SPX. I will go over this in the morning regardless, but after looking at the futures are red right now. On the weekly, we are just at the support. And on Friday, we closed slightly right here. All right, usually this candle can be a reversal candle. It was sort of an indecisive candle. Buyers tried to take the market up, but then the sellers won, obviously, right? We closed right near the lows. We have almost 5 red weeks. Can we reverse for 1-2 weeks? Absolutely, we will see some greens. But just because we're red for 5 weeks doesn't mean 1 week will be red. It's like basically playing in a roulette saying, oh, we got 5 reds. There must be a black coming in. Let me go 50-50. I mean, red can show up for many, many times. Like we had the same candle here in the March, right? A major event happened, COVID, obviously, right? I'm not saying the same thing's going to happen here, but stay open-minded. We can still come much, much lower this week. We can still fall. And I think one major thing that we have this month is CPI. Now, what is CPI? CPI is the Consumer Price Index. Basically, what that means is, to put in a very simple layman terms, basket of let's say goods, for example, something that you buy, if it cost you $50 last month or the month after, and this month if it costs you $52.50, right, that $2.50 increase percentage, right, is the increase in the CPI index. Okay, there's more to it. You guys can do some research. I'm just giving you a basic idea of what it means. Now, if this number is higher than expected, chances are we sell off that day. We will see some negative reaction. But if the CPI is lower than the expected, that will be considered bullish for the market. Now, that bullishness is not like, okay, now the market is bullish. No, it may last for the first half of the day, 1 day, or maybe 2 days. All right. We do get some green market prices that this news then, right? If CPI is lower than expected, is considered bullish. If it's higher than expected, it's considered bearish. All right. Now market can sell up. And sometimes when the CPI is higher, the market can still go up. And if the CPI is lower, the market can still come down. So anything can happen, but this is the scenario that's supposed to take place after CPI, basically. Okay, so CPI, we have it on when? We have it on Wednesday. That's something we'll be looking at, and then we'll see what happens. And next thing, on Friday, we closed red. On Friday, we sort of closed red. We recovered at the end. You know, it was indecisive. On Thursday, T and I were talking, and this is a very typical candle on the daily, and then the weekly was lining up. We sort of saw that, you know, we're going to close near 41.30, 41.50. We were pretty spot on one day before, which is not bad, right? Now, so that's a daily. And next I have bonds. Lately, UB bonds. Yeah, and usually guys, on Friday, whatever the day happens, probability is Monday continues. Just keep that in mind. On UB now, you know, these are treasury bonds. They have been selling off for the last few days, and they have been affecting the market really negatively, right? Now, it's not always the case, but lately that is the case. The money keeps coming out of the bonds, but it's not going nowhere, all right? And the bond market is huge. So do keep an eye on UB. If UB is, or treasury bonds, right? If it's weak next week again, then the market may sell off even more. All right, this definitely is adding on to the market right now. So pay attention to treasury bond futures. All right, on your platform, the ticker may be different. It may be UB/UB1, whatever it may be. You can just type in treasury bond futures, and it'll come up on your platform. Or you guys can use this one on TradingView. And then DXY, dollar's been strong lately, right? A nice little bull flag. And if the dollar breaks out, I went over this on pre-market. When the dollar is strong, the market takes that as a negative. All right, why? Example, any e-commerce, let's say for example, Amazon, if it's making $100 million in India and the dollar is stronger, then the Indian currency gets weaker. When you convert that currency into dollars, that revenue, that number is now lower. All right, so when Amazon reports, it will be a lower number. All right, and when dollar is usually sometimes weak, e-commerce stocks tend to go up. All right, or tech. All right, so dollar definitely matters. So keep an eye on dollar as well. And if we go on the weekly chart, we're actually pretty high right now. We've been straight up since June, and ever since the market has also been selling off. Please note. All right, we are currently at resistance. The question is, do we break out from here now? If we break out and we hold above, then obviously that will have a lot to do with the market. I think markets can see much, much lower. All right, so let's keep this in mind and see what happens. And let's just see in 2000 what happened. Okay, so in 2000 we had a dollar very strong, right? Not in 2008, it was actually weak. It wasn't, I mean, it went up, but it wasn't as high as now. But in year 2000, on the huge tech sell-off, dollar was actually trading at $1.21, $1.20, right? That's $1.03. So if that same scenario takes place and we do flag and break out to the above, then tech stocks can maybe see, or any stock that, you know, is related to this can see much lower, which obviously adds on to the weakness in the market. All right, so DXY, and then we have TNX, right? The 10-year treasury notes, the rates, this has been strong, very correlated to the market. And obviously, if this continues higher, then the market will likely sell off more. But if we slow down here, it flags, that gives room for the market, you know, to either hold or get some green days in between. So if we look at VIX for now, for example, right, we have been trading near 30, and in order for VIX to continuously hold above 30, I covered this over and over. In order for the VIX to hold above 20 on 30 continuously, right, market will need some sort of an event or default or some major negative news in the market in order for it to continue holding. So right now the market can definitely hold. I mean, even for the next 1-2 days, we can hold 30 above 30. Maybe Monday we sell off, or maybe we go green. I have no idea. But without any major event or any default or some major negative news, then the market is probably going to cool off. Then basically what's going to happen, we covered this last time also. We've been teaching you guys this one thing over and over. LB also covers this. The VIX sometimes when the Vanna rallies come, right, the Vanna rallies happen near the lows, then the VIX cools off. For VIX, it goes much lower than SPX goes to highs, all right? So basically what I mean is, let's say VIX is at 28, just an example, okay? If VIX is at 30 today and SPX is at 4,500, for example, tomorrow when VIX is at 20 and SPX is at, let's say maybe 4,700, right? The next time, initially when VIX, now the next time VIX, this downtrend, the increase in SPX is not as much as how much lower the VIX has come down. The SPX should go higher, much higher in a percentage. All right. And now the next time VIX goes to 30, and we calculated SPX is probably not going to be 4,500. It might be much lower. It might be 4,300. All right. So that's how they play with VIX and SPX. So just make sure you guys note this. For example, so let's just compare the charges so you guys get a better idea of what I'm trying to say here. So let's say, for example, so this is VIX right here, and we'll go over SPX, right? So on SPX, we'll go on the daily. Now, let's say, for example, before we had this turn, so let me remove my drawings. Now, let's say, for example, right here, on February 9th, let's look at Feb 9th. So let's just do it live and see how these relate to each other. So I can explain better, I guess, and you'll see the, so on Feb 9th, we were trading at 45.88. So on February 9th, VIX was roughly, where is it? We were at 20, so VIX was at 20, all right, at 20, and SPX was where? So you guys can see this lines on both, they move at the same time. Now, next time VIX was at the same level, SPX was around the same price, a little higher, VIX higher, and then right here, if we see 43, we lost a lot of VIX, but we did not get the same upside. So at these same levels, so right here, so 13 Jan, so 13 Jan, we had VIX near the 20, but then when the VIX was near 20 again on 4th April, SPX was not as high. We gave up all this room. We gave up this entire room on the same VIX levels, right? So that's how you compare these charts. It takes a little time. So we did not get the same upside move that we should have with the VIX at these same levels. Makes sense? And then the next time VIX was at 30, we took out the lows and we're holding here now, okay? And here the VIX is still not near the highs. The VIX is still not at 36, but we're already near the lows. So if VIX goes to 36 here, we're gonna take out these lows and we go much further down, all right? So I hope, sorry for the confusion there, but I hope that makes sense, all right? That you really have to dig into it, look into it, and then you get a better picture. So that, and bear markets, when do they really bottom? I don't really know. I see some things on FinTwit, this, people saying bear markets don't really bottom in May, they usually bottom near fall, September, October. So let's go back into 2008. When do we actually get the turns? Let's see, so I'll go on the monthly. Let's just look on the comparison in the monthlies. Because May, there was a first thing, I learned about 8-9 years ago, they sell in May and go west. There's a saying in the market, I think T knows, right? T, if you want to type that out, if you remember. So here in May, so April, May, we are actually weak. In year 2000, we were pretty weak. We did not get a substantial bounce. So yeah, so in the fall is when we started bottoming in the year 2000, this, right? So this is when we started bottoming here. They tried, nope, and then they gave it the thing, and then we bottomed finally in the fall of year 2002 after 2 years. All right, but May there was weakness. So May 2001 there was weakness, and then same thing again in year 2002, same months there was weakness. All right, but in the fall is when the market usually strong and holds the levels. And then same. So let's see, look in 2002, 8 in 2008 in May actually the market went up. So here the market went up, and then it gave up, and then it actually went up here again. So that theory, nope, it did not bottom here. So the first time it did not actually bottom in 2008. In 2009, it sort of did in the fall, and then we went up. So okay, so it makes sense, right? So that's how you guys can compare this, right? I'm looking at the monthly chart that you guys can do in 3 times. So I think we can still see some more weakness consolidation here, and then towards the October, November, we might have some buys, and then next year we see what happens again in April, March, May, right? And Paul Walker, we already covered. Bitcoin, let's just quickly go over BTC USDT. So Bitcoin monthly, pretty weak here. I'll go over the weekly chart. Man, this is, okay, so I broke the trend line. I had one of the trend lines drawn here. Well, let me see if I can get it again. Okay, there was something along these lines. Nope. But anyway, so that trend line broke. So this, I had this long trend line, right? It's very accurate trend line. It held all these lines, but now we finally broke below it. The question is, do we hold here or do we go lower? And recently, Bitcoin is also correlated with the market in many ways. And I think if we broke support on Bitcoin here, and if we don't hold above 30,000, right, on 30,000, there's a good chance it probably bounces for a couple of weeks, then we see what happens. But if 30K breaks on Bitcoin, which is still another 4 or 5K away, so $4,000 away, then we can probably come test these levels or even this breakout all the way towards $20,000. So this right here, this is actually the next support we have under 30K. All right. So under 30K, if we do break it, then it's all the way towards 20,000. And I think that might negatively affect the markets as well. Okay. So that's Bitcoin, a weekly chart for you guys. Let's see if we hold. But there's a lot of volatility in Bitcoin if you guys are trading on Binance. If you're trading on Binance, like today I was looking at it, the 5-minute candles are going, like, there's a lot of volatility. This is a lot of volatility, man. That's some crazy volatility candles on the 5 minutes. If you're scalping on Binance, you guys can have your indicators of moving averages. There's a lot of money to be made here, right? And next, some scalping. So sell in May and go away more like sell in Jan and see next year. All right, so that's T's comment. Now, guys, one thing, on Friday we were scalping. So I'm just gonna go over some scalping tips, right? The one I don't make my scalping too complicated. I really don't. I simply just use these levels on gamma level. These levels are not my levels. They change every morning. These levels are backed up by data. They're backed up by options. So every of these levels right here, combo 1, combo 5, large gamma 3, combo 2, right? These levels are all based on options. And if you want to understand the terminology here, you guys can just go on to SPY gamma. This is available for free. You guys can search here anything that you guys need to search about the levels, and they can explain what exactly they are. For example, what's a call wall, what's a gamma profile. They have everything here explained. So if you guys want to learn, okay, and I highly recommend, if you follow SPY gamma, for you guys to go through these things. Now, on Friday, one of the scalps that I was looking at was IWM. So let's go on IWM. It was a 5-minute chart, right? And I was looking at the other indices also. Then I was following the flow as well on that, right? Now in the morning when the market is weak, right? When the market is weak in the mornings. Now first, let's go here. So right here. Now you guys can follow my lines, when I scroll on SPX and IWM. So here, when the market sold off right in the morning, I usually avoid, right? This candle right here, after many red candles, usually gives us a good reversal signal. And if you're playing reversals, you have to be very disciplined with this, right? You can choose to buy. You can choose to purchase right here, which at 180 happens with strong support. You can choose to play calls here. Now, if you do choose to play calls here, your stop should be the low of this candle. Now, can they fake you out with a low of this candle reverse? Absolutely, it happens many times, but you gotta stick, but you don't know that's gonna happen. And if you hope that that's gonna happen, then that's your fault for staying in the trade. So if you take the low of this candle, you take the 5% loss on options. Let's say you bought the options at $1 and they go to 9 cents, you take the 10-cent loss and you sit, which is fine. In options, you're not gonna hit everything all the time. Sometimes you just gotta take the loss, you stop out, it's simple. Now you wait for the next trade, okay? However, if you enter here like you did and you catch this move to the upside, you will probably gain 40-50 cents delta on this huge move up. All right, so let's look at an example. Let's do some math here. All right, just an example. Your stop loss will be 10 cents, right? Let's say your next stop loss also hits for 10 cents. You're down 20 cents. All right, now this obviously will vary depending on option, how fast it moves, and in case if there's a big candle downside or upside, it depends. But however, you nail the next one, so you take profits on the next one, and your profits, now they could be 10 cents, 20 cents also, but if you let the profits play, you let your candles play, you're patient. If you manage size well, your size is consistent, like it's good, so you're able to hold through. If you're in heavy, you're gonna take your 10 cents profit, right? But if you're in with a reasonable size, you can obviously hold the trade for a little bit longer, and you take this trade out for 40 cents profits. your 0.40 minus 0.20, you're up 20 cents on your scalp, right? So this is just an example, guys. Obviously, in the real life situations, it can be a lot better than this, or maybe your stop loss might be more, okay? But just an example, all right? If you manage your size well, you will be able to set through trades, and you can make these profits, all right? Now, when you're in here in between, do you want to take a scalp here in between? I mean, unless you have some strong reasons in the market, you have some strong understanding of the market, some news or something coming, it makes a sense. But when the market already has this move, now you want to sit. Why? Because the market sold off in the morning strong. Why would you want to take a scalp here? Right? No, like forget your MACD, forget your RSI. Many of you guys look at the RSI, MACD. I highly recommend you follow them on bigger time frames, on 4 hour, 2 hour, and then you can hold on to your trades. Then you look at the hourly time frames. But if you're playing a 5-minute time frame, you're better off playing hard resistances. And these red and blue lines I have are 50 and 200 MA moving averages. Okay, I usually always follow the 200-day moving day average. It has more chances of being right. Okay. And now on IWM the other day, I called a scalp right here. The reason I called it here, number one, it was above the 50 MA, which also works. But then I was looking at the SPX. SPX has a lot of hard resistance here. There's a lot of resistance here. Okay. Well, if SPX goes down, then it's likely that IWM also might follow or react to it. All right. Now, when this level was strong, this 4150 was strong resistance, then I zoomed out of IWM. I think I sent this chart to you guys in the lab, in the premium chat, and we took out the lows of this day. You guys can see right here, IWM already had resistance, because before the market closed, that's exactly where IWM was getting rejected right here, right? That's exactly where IWM was getting rejected. And I told you guys 185.50-ish is where I'm looking at to play IWM around these levels for my scalp, right? And then obviously this was a great scalp for the short entry. It was a great scalp for the short entry. Your stop will be the high of the day, right? This is a huge move that was caught. And then obviously you would take your profits up, right here of the morning support, right? Or maybe even here, you can scale out, it's up to you. Then the next time IWM came up again, and I said, you know what? Another scalp is possible. Why? Because SPX was back to where? 4150 at the same time, right? Resistance here, okay? Likely for rejection. Now here, it was even more confirmed, and I was waiting for IWM that, you know what, maybe I get my 85.50-ish. The highest I got here was 185.22. I was looking for 185.50-ish, the high of the day around here, for me to take my entry. When you're looking at resistance on SPX, one thing I'm going to give it to you guys, listen to this very carefully. Let's say if SPX is also a resistance, or NQ is that resistance, and if you're following RUT, which is a part of IWM, on a resistance line, if this candle is made, this is a very accurate candle most of the times. This candle usually marks the top for a certain period of time. All right. This candle is usually a very big indication on a 5-minute chart that, you know what, this is the top for now, and it's worth taking a short scalp. All right. But unfortunately, I missed. And what do we have? On the 4,500 on SPX, we have resistance confirmation. NQ was also at one of the gamma levels. At the same time, right? All the levels are sent in the morning. You just can put on another chart. You guys can see it. And at the same time, guess what? IWM even gave a bigger downside move. All right. Now, I'm not saying I would have held until here, but I probably would have held until the 200 MA, scaled out, or maybe sold out, because this would have gave a lot of deltas. From 185 all the way towards 183.51, that's $1.50 on delta. So if you're trading an option, let's say, for example, what I mean by deltas, those that are new, if you don't understand when I say deltas, this is what I mean. Let's say, for example, you're trading a 184 puts, and IWM puts move the most beautiful. Let's say the delta is 40 cents, all right? And these options are going for 90 cents, all right? On $1 move, you're gonna get 0.90 plus 0.40. So that's $1.30. So you take 40 cents profits. And now on the another 50 cents, this delta will probably increase from 0.40 to 60, I think. So on another 50-cent move, you're looking at, if the delta is 60 cents on the next $1, right, you're looking at another 30 cents. So you're getting $1.60 almost. All right, almost double your cost on $1.50 move down on IWM. And IWM options move so beautiful. These options actually ended up going to almost I think they were going for $4 what I saw. So what was the intrinsic value? It hit 180.65. So these options they actually went up to above $4, whatever they were trading for more. 185 went to $5, but these options actually went over 300%. And you could have held them, if you wanted to, if the market was showing its weakness. All right. So that was a very simple. I did not put in now I know a lot of people use MACD. usually avoid it unless it's on a bigger time frame. But for me, it was very simple, a very simple scalp that if, and I would have stopped out if we closed above this candle. I probably would have stopped out. But a nice follow through SPX, and then NQ was also at resistance. Okay, and if you guys use these 50 and 200 MA averages, so let me just go here quickly. I'll remove my large gamma levels. These averages work very well on 30-minute charts, right? If you want to hold the trade a little bit longer, right here, for example, the 200 MA on 4,300 on Thursday, right? When we had a huge day up on 4th of May, sorry, which was Wednesday, I believe, after the Fed minutes, right? This level right here on 30 minutes, a 200 MA rejection, you can enter a short scalp here, right? Now, this would have been an overnight scalp. I would obviously wait, right? But during the day, if this was to happen, you could enter the scalp and then catch the downside, because if this 200 MA plays as resistance, you can make a lot of money. And vice versa, if we hit support, this also works on support right here, for example. The 200-day moving average works on support as well. So on this day, right, we went below the 200 MA, but the next candle recovered it. You could have easily played calls here, and your stop would be a close below 200 MA, and then you can ride that play. All right, and here's where you make 200, 300, 400% because you ride the moving average. All right, it's above the 200 moving day average, right? And here you guys can see a strong resistance, and then you guys can also zoom in onto the charts, a very strong resistance. So 200-day moving day average works very well with half an hour, 1 hour, even 5-minute charts. All right, but remember, if you're planning to hold the position for the next 3 hours or 4 hours based on a 5-minute candle, I highly suggest that you look at the hourly candle. All right, a 5-minute candle scalp works for 5 minutes only. All right, they work for 5 minutes only, not for the entire candle. All right, for example, what I mean is, here, so my example here would be, let's say on the 5-minute, you bought the scalp right here, you bought the scalp right here on the 50-day moving average, right? You use this as a resistance with other levels, obviously, not just the 50-day only. You're looking at other things in the market, right? Let's say you buy this here. The next 15 minutes, you actually got your move. You got your move. But based on this 5-minute, if you're trying to hold this for 1 hour, 2 hours, you better keep your stops tight, because in the next 15 minutes, this candle can take out the highs, and that's not a scalp no more. All right. So if you're looking at this, so many people ask for the time frames. If you're looking at a 5-minute, make sure you manage that position within the 5-minute candles, or maybe the next 3, 4, 5 candles. If you're looking at the half an hour, you buy yourself maybe for the next half an hour, 1 hour, 2 hours. If you're looking at the hourly candle, you buy yourself the next 2, 3 hours. All right, that's how that works. And then your stop losses will be above or below the closing of those candles. All right. For me, my scalping is very basic. It's very easy, right? I use my gamma levels. Mainly, I use those as strong resistances. All right, I use them as strong resistances, and then I see. Okay. And guys, I think I'll let you guys. I don't. Isaac, I use 8 and 21 EMA on daily charts sometimes, and they work beautiful. When a stock is in a trend, usually I use them on the uptrend mainly, but I know a lot of people use them to the downside. But downside, I just play volatility scalp differently. But 8 and 21 EMA, I love using them. I use them when the market is strong for an uptrend, and then I ride the 8 or 21 EMA, right? Ride the 8 EMA, and if the 8 EMA breaks, then I look for the 21 EMA bounce touch on the daily time frames. I use them, right? And guys, if anybody wants to talk, anybody wants to share, please go ahead, unmute yourself. You're more than welcome to talk. Anything? T, any tips you want to share? Anything from your end? Nobody, no one, just me. But that's fine. I guess if you were to scalp only one ticker, SPX or SPY. Now, SPX options are usually expensive, Rolando, but these options pay a lot. If you cash this, these options pay a lot. Like I looked at the flow the other day, the SPX options can pay well. These options right here, when I looked at weekly candles, this was a perfect time to buy some calls, right? Let's say if you bought the 41.10 calls at $2 maybe, they ended up going to intrinsic value of 20 bucks, right? That's 1,000% return on 2 candles. Right, but for this, you got to have money, because if SPX goes down or consolidates, then those $2 go to zero very fast, right? For me, I love scalping SPX and SPY, IWM, and the Qs. They're amazing, right? And for me, it will be the indices. And I think anybody that can learn how to play indices or scalp these, there's a lot of money to be made, because on Wednesday before I left, I really wanted to play the Vanna. This was given to me in the morning by the charts I looked at. This right here, actually, in fact, on the Fed, this was given to me in the Vanna charts in the morning. Like, I understand how to read them. This move that happened was given to me. Maybe I wouldn't have caught it here, right? It bounced off here. I probably would have caught it on this candle close with the 200 MA. I probably would have bought it at 42.50s. And man, these options went up, I think, 4,000, 5,000%, many of them, right? So for me, SPX is great on the option expiry days, right? And Apple works well. Why? Because the spreads are tight. There's a lot of liquidity in it. Hamza, yes, for SPX, if you want to play their options, your account must be big, because on SPX, let's say, for example, if you have 20K in cash, just an example, if you have a 20K account in cash, right, I would not play more than $200 at a time, especially on the Vanna days. Why? Because it can go to zero so fast. But these $200, if you're consistent, and if you understand when the Vanna will come, and you understand there's a money to be made, these $200 can turn into 2,000 also. So even if you, let's say you get 3 wrong, right? So now these 3 is you did your research or you did your work, let's say, for example, but it still ended up going red. But that one, the 4th goes right. You hold it long enough, that should give you at least $1,500 in profits, which covers your $600 loss plus your 200 recent principal, right? Which gives you roughly so 800, which gives you $700 in net profits. $700 in net profits. All right. So that's how you would play SPX. But obviously, if you're a disciplined trader, you put your work into it, you will be right more than wrong. And this requires super patience, because this is not something you can play every day or every other day. This, maybe you get an opportunity 3 or 4 times a month to play this. So you have to be super patient for this. If you're somebody that's looking for rallies every day or every expiry day, you will lose money because you're not patient to wait for the right entry. All right, because you're not patient to wait for the right entry. You're in a rush to make money, right? But this happens 3 or 4 times a month, and you just gotta be super patient for this. All right, and I hope I did my math right here, right? Oh, yeah, I did. Amazon is great. Amazon is great, but they're very expensive again, right? You need bigger accounts to play. Google's amazing. Tesla is also amazing. Tesla, but again, requires an account, because with this volatility, big side options are expensive, right? And guys, I will be starting something in MSL. I will be starting this. I hope you guys attend this. It's going to be named, I will speak with TNLB what to name this. We'll discuss MSL series on strategies. All right, so I'll go over maybe lesson 1, lesson 2, lesson 3, and so on, for all types of spreads, one at a time, all types of spreads. So it will be just one spread, spent all 1 hour on it, all the pros and cons of it, from basic to advanced. All right, lesson, not a soon lesson. All right, so we'll have the whole series on vertical call spreads. All right, and how do you know when to take the L? A roll, the same thing. Now on SPX, if I'm playing, right, on the 5-minute, if I'm playing SPX, for example, and I'm playing in the midday. If I'm playing in the midday, and let's say, for example, I think this is going to break resistance. Just for example, right? Let's say this bear flag, I think it's going to go, bull flag on this little small 5-minute candle that's going to go up. I play calls here. On this resistance, I can either take my profits, but if I think it's going to go higher, I'll wait. I'll take a shot, I'll wait, right? But as soon as this candle right here comes down and comes near my entry price, I'll just stop out. So that would be scenario 1. I stop out. Why? Because I was trying to play for high returns. Unless I took my profits here, different story. So I stop out, right? Or maybe I stop out here. Doesn't matter. I reset. Because the next candle is green, I'm not just going to jump in a trade. No. Let your trade set up. Don't jump in the trade right after you stopped out. Okay, unless you're up a lot in profits, don't. And another scenario would be, let's say I catch the bottom right here, for example. I buy calls here. Okay, I buy call on this candle right here, this candle right here, green candle. But the next candle all of a sudden takes me out. All right, now it's up to my risk tolerance. I can either stop out here if I went in too heavy. If my position size is not right, I stop out, even though the next candle it absolutely rips through. Or I can wait for the 3rd candle. Why? Because sometimes what happens is they do fake you out. All right, they will fake you out in these scenarios, and this is a very common thing that's been happening a lot of times. You guys seen they will stop you out like this. All right, and many people do get stopped out. If your size is heavy, you're gonna maybe get nervous or maybe be like, oh man, shit, stop out. But if your size is right, you're playing accordingly, you can afford to maybe get a better stop loss on this third candle. So if your size is fine on the next third candle, if it's too big of a move down, it does not reverse back and close up, then you stop out. Then you take the L and you stop out. But you can wait until this candle. If it reverses back up, you can go on it. Now this is a 5-minute chart. So let's look at a 3-minute chart. You can go a little closer into the chart. So let's go on a 3-minute chart. Right, so you enter the play here somewhere around here, I believe, right? And you can look on the 3-minute chart. If the weakness stays, if the 3-minute does not make a reversal candle, it continues down, then you can stop out. All right. For me, do you buy covenant? For me, it's right here. I just went over this. It's very simple. Now, holding a level, it means there are many different meanings. If I'm scalping, if I'm scalping, for me, this is a test of a level right here. This is a test right here. This was a test after weakness. This was a test again, right? On the support side, I would look at this hold right here. A market goes up a lot. It gives up the gains. Now I want to see, is it going to hold this combo one? First, reverse down, does it hold? Yes, it held. It even went higher here. But then I might not enter this play. Why? Because this is another gamma level. So now it goes up, no problem. It comes down. Here's the reversal candle that it made. This reversal candle right here, right? On the next candle, I will see if it stays above this candle when it's about to close, then I probably buy calls. Right? But when I buy calls, I'll probably take my profits fast here, small profits on this resistance level, right? Now, on the daily, it's a completely different scenario. Let's say if this is a daily chart, obviously, let's say, for example, Microsoft, we'll go on the daily chart. If I say it needs to hold, right? Now, here's a Microsoft chart, right? I would wait for this bull flag right here. When it breaks out here, right, when the market was, everyone was starting to look bullish, I would wait for this bull flag and see if it can continue holding these levels. If it can, I'm not in a rush. I know the market, how, oh man, with this. Right, I would wait that it continues holding, but because it failed, it was unable to hold here, it came down, I will avoid the play, as simple as that, right? It failed to hold these levels, right? And here it failed over and over again. It failed to hold over and over again, right? It just completely failed. Now on this bull flag, I could have taken calls maybe, but the next day if it came down, and then it's a good thing to stop out also. Maybe I would have bought calls here after the levels held and it was bullish. But in this market, I already knew I'm not going to buy calls. Just looking at the overall structure, I was not buying calls because after missing this huge rally, why am I going to buy the elevated call pricing here? Which I could, but then obviously I was looking at external other factors, SPX, NQ in the market. What else is going on, right? So that's one. And then another level hold will be something like this. You guys see this little bull flag? The levels were being held above this resistance. And on this candle, even though it's red, it could be a reversal candle. I would probably scale in some calls because it's showing a lot of strength. It can go up, right? Maybe some people will choose to buy puts here just based on these candles, right? But because for me, the only thing I would look at is this that is held above this zone for all these days. So similar to here, it's held above these zones for all these days, but then I will stop out as soon as I see weakness. But you know what? Nope, it's broken down. Like if I bought calls here, there could have been a chance. Let's say the market was normal. If the market was normal, I would probably buy calls here, but at the same time, on this day, I would probably stop out. I will not hold it. All right. But right now, I'm not buying any calls, as you guys know, and nor I will. Right. I'm not going to try to look for a dip or nothing like that. The things that are working in this market are playing these big gamma levels and short them. Like for NDX, I also have my gamma levels up, right? They're working very well, right? You guys, they're working very well. And so why, so look at this bounce right from combo 2 the other day, right? So why am I gonna, so playing levels with data, the gamma levels, guys, are based on options. Do you wait for the candle to close if it breaks your support level? And if so, what time frame would you like confirmation? But see, now that depends. So let's say, for example, if I'm scalping on a 5-minute, if I'm scalping on a 5-minute chart, now let's say, for example, on Microsoft, and I'm going to be giving you guys more stop losses than profits, right? Let's assume the worst scenarios, okay? Now, let's say, for example, if this level broke, now this could be a fake out one I just told you guys, I will not enter here. For me to enter puts here, I would wait not just on this candle. Oh no, that would be a full-on trade because this could be a fake out, which we went over. I would look at the indices also. I would look at the overall support, and 270 happens to be a very strong support. So many factors kick in. Okay, many factors kick in. This is this 270 automatically is the strongest support on Microsoft right now. The day it breaks and holds underneath and builds a bear flag is going to flush towards 250, I think. But here, this level was not held, right? Down to the downside, it came right back up. So why would I even force, right? Many people probably bought puts here on this wick, but at the same time, this bear flag held, right? This bear flag held. For me to play downside would have been something like this level coming down or holding more. But here, the 270 support was just too much. And if I'm looking at the hourly candles, for example, right? Just so we have a better idea. I don't scalp Microsoft. I usually avoid to scalp. Let's go on SPX maybe. So SPX 1 hour charts. So here, where would I scalp? Let's see, on the hourly, let's see. So the gamma levels, I think, are working perfect on this. I don't see much. The only thing I can see here on the hourly that I would probably do is right here on a bull flag, right here. On this 1 hourly, we keep rejecting it. We keep holding above here, and then we come back up here. And even though we reject on this candle, as soon as we take the highs out here on the 1 hourly, right, which happens to be 4,200. So you guys need to know these numbers: 4,200, 4,250, 4,300, 4,150, 4,100, just psychological numbers. When they go through these numbers, there's usually a huge burst, right? As you guys can see here, the move is usually explosive. All right. So I would probably enter calls here with a stop loss under 4,200 on the hourly, and then maybe go through here and just take my profits here somewhere. But the question you're asking, Isaac, I think for me to answer this, I should do this live, right? Because by looking at it, it becomes too easy. Like by looking at it, like my psychology won't be the same. It's very easy for me to answer when this move has already happened. But IWM that day, for example, I gave it to you guys live, that this is what I'm looking for. This is why I want to enter puts, right? So for me to give you an answer like this, I mean, like the psychology won't be there. I hope that makes sense. Like, I don't want to be one of those guys and like, I would have done like here, maybe I would have done it, but the answer is too easy to give an answer when the move has already happened. So let's go over this live. Just ask me in the chat on the hourly charts, and then I probably can. The only thing I can see here to answer your question is right here on Microsoft on the hourly on this reversal candle. So we faked out, we went up, retest. This reversal candle is where I would buy calls. So something like this, right? Based on the hourly. And then obviously, you want to do, and obviously from the calls, take your profits into the markets. It's a huge move up.
Hey, Ricky, can I just elaborate real quick on the question?
Yeah, go for it.
So so you just looked at the hourly chart right there, and assuming you jumped in for a call, do you go and switch to like a 5-minute or 15-minute candle to kind of give yourself a support level? Or do you always just stick on the 1 hour since you jumped in on the 1 hour?
Okay, so this is a good question. This is a very good question. So here, if I'm playing the 1 hour candle right here, and this candle comes and retests this 15 points down on the 1 hour, I cannot really get scared out of the trade. I have to understand that I'm playing this for the coming few hours. So for example, if somebody entered the trade here on this 50 MA break, just an example, right? This is a good swing. On this candle, it did give a nice little swing to the downside, right? But I would wait for the close, or if it continues holding here and I see the premium, then now you got to watch the premium along with this, not just the candle alone. So other factors kick in, right? Then I also know that my hourly, this 200 MA support happens to be here. I'm just giving you, this is a very example, right? I hope you understand. There external factors will kick in here. This 200 MA support, I'll wait. If it closes underneath here, the next candle, if it breaks the low of this own candle right here, I'll just stop out. But if this candle, the hourly maybe continues holding about 200 or near here, I'll hold until I take my profits. Maybe I'll take profits on this candle on the reversal, right? Or I can wait that for the next candle to close underneath this green candle, because usually candle does not mean it's always true. Then you want to play the strength and the price action, right? Or maybe I can see now that we're holding both the 200 MA, 50 is just above it. Maybe we want to go close or go to a test near the 50 MA, all right? Or maybe if I buy the price here, for example, on this candle, right, on the hourly candle, this swing right here, which is from 44.43. So the opening price here was 44.43. The low was 44.41. So 2 points, not much. But let's say if this was 20 points or 10 points, I cannot get scared, right? Unless I run with a bigger size, then it will be scary, obviously, right? But then I want to let the hourly play out, right? But then I will look at the 5-minute charts. Obviously, if it's building a bear flag or if it's showing some weakness, maybe I'll stop out. But I cannot look at the hourly, 4-hourly candles and then the 5-minute breaks down and then I want to stop out, you know, because the market maker, they know what people are looking for. So sometimes it's good to let the price action play out, right? Because that's where the rewards are usually. So, I mean, that's what I would do. Like, let's say, for example, on this hourly candle, right? If you saw the best example would be on this hourly candle, let's say you bought the puts on this hourly candle, okay? But the next candle, even though it took the lows of this candle, now it reversed, right? And now it's testing the highs here. I would probably stop out. I would probably stop out the same next hour, right? Because why am I gonna? Because this could be a bottoming candle with a fake out, right? So I hope that makes sense. And I think hourly charts can be broken down into 15 minutes, 30 minutes. They can give you a better overview then.
Gotcha.
And
very good. Thank you so much.
Yeah, I mean, there's so many different answers for these things. The more you do this, the more you watch, I think the more it makes sense, right? I mean, who would have thought this day when the market just completely shot up? I was going into my appointment and I did tell you guys that, you know, after this moves were happening, like on the 5-minute, right? I was watching this happening when I was on my laptop. I was sitting right there and I did not take place because I did not have my additional screens. Like I did not want to rush into it, but I did mention on voice chat, and Bucky is my proof that I told him before this move even happened that Vanna's coming today, right? I gave him the move, but on this 5-minute strength, as soon as we went up on the initial move, nothing happened. We consolidated here, we tried, but this big dump at the 200 MA, and as soon as this candle reversed, it would have been worth a shot on calls. And I did mention in the chat, if you guys go on Discord on the same time, that the first will be 4,200. Once we get through 4,200, 4,250, we will absorb sellers. You guys see these candles? They were absorbing sellers here basically after this tremendous strength. And when the market just took out after, right, they were going to take the market up. This was fueled by the selling of options, right? A lot of options were coming off here. They absorbed all the sellers, very small moves on the 5-minute. And I said on around here that where 4,300 is in play. And it happened the same day. And here I would definitely take my profits. And this same level, even though people got bullish, now on the same candle, people were bullish. But another comment that I made was that please don't buy calls based on this daily candle. What's the reason I said this? I only one reason. Don't buy calls based on this daily candle. Why? Because I knew why this move happened. I knew exactly why this green candle was made. I knew exactly this green candle, it was based because of options. This was not buying going on. That was a lot of options coming off and a lot of VIX was cooling off, and that's what took the market up, right? So, and I would never, even though this looked bullish, a lot of people were already calling, oh, highs are coming, this, that, blah, blah. I already, like, I could have been wrong, obviously. I did miss this entire rally that happened in March and whatnot. That's fine. But I knew the move. You take your profits here, the next day, I was absolutely on point. Right, then we had this downside, right? But yeah, and so we had a monthly OPEX on May 20th, and then June we had the quad witch. One of them should be bullish. I think the monthly might, the May one might give us some good Vanna days. But now what our eyes should be on is this. Many of you guys might be looking at the weekly reversal candle, which can absolutely play out. I hope it does. We need VIX to cool down, right? But just be careful. Just be careful. These candles are very, very deceiving, right? And we are just at a very critical support. Do we break here or do we go down? Short term, I have no idea. But in the longer run, personally, I believe we break 4,000 in any of the weeks coming up, or maybe in a few months. I have no idea when that's going to happen, but it's going to happen, right? So with this, guys, I think I'll end it. And thank you so much. Happy Mother's Day to all of you guys. Well, to your mothers, I mean, not to you guys, but enjoy your dinner. For pre-market, I'll have some data out and we'll go on from there. And I hope this was helpful. Thank you.